Hey everyone, ready for a deep dive into something that's been hitting all our wallets lately? I'm talking about inflation,
Whoa.
especially here in the US.
Oh, yeah. Inflation. It's definitely been a hot topic.
It really has. And we're going to dig into a podcast episode all about it called The Impact of Inflation on Personal Finances in the USA.
Sounds like a good one. I mean, just going to the grocery store these days, you can really feel it.
Right. It's like one day your coffee's one price, and then suddenly, bam, it's way more expensive. What's the deal?
It's kind of like a sneaky thief in your pocket. That's basically what inflation is, the rate at which prices go up over time for all sorts of
So
stuff.
it's not just me feeling like everything's getting pricier.
Not at all. It's a real thing, and the government actually keeps track of it using this thing called the Consumer Price Index, the CPI.
TPI, so is that like a giant shopping list or something? How does that work?
You're pretty close. It's like a huge basket of everyday items. The government tracks the prices of all that stuff to see how much they're changing.
Ah, okay, that makes sense. But here's something I don't get. They say a little inflation is actually a good thing. How can that be?
Well, think of it like this. A tiny bit of inflation, around 2%, actually helps to keep the economy moving. It encourages people to spend money instead of just holding on to it, because they know things will probably cost more later.
So it's like a nudge to spend.
Yeah, exactly, a gentle nudge. But when inflation gets too high, like way above that 2%, that's when things start to go off the rails and your money just doesn't go as far.
Okay, yeah, that makes sense. So a little bit of inflation is like the Goldilocks zone. Not too much, not too little.
Exactly. It's all about balance. But when it gets out of whack, that's when it starts to seriously impact our personal finances.
Right. Like how?
Well, first off, it shrinks the buying power of your money. Imagine this. Inflation's at 5%, but you only get a 3% raise. You're technically making more money, but in reality, you're losing ground.
Ugh, it's like running on a treadmill and getting nowhere.
It really is. You work hard, you might even get a raise, but you're still not getting ahead because everything costs more: groceries, gas, rent, you name it.
Yeah, and what about savings? I mean, we're always told to save, but what's the point if inflation's just eating away at it?
That's another big one. Let's say you've got money in a savings account earning a measly 0.5% interest, but inflation is running at 4%. Guess what? You're losing purchasing power every year.
So even though the number in my account might be going up, it's actually worth less because everything else is getting more expensive. That's frustrating.
I know, right? It's like your money is slowly leaking out of a hole in your pocket. But don't worry, we'll get to ways to fight back against that in a bit. And actually, investments can sometimes play a role in that.
Oh, investments benefiting from inflation. Now, that's something I want to hear more about. But before we get to solutions, we've got to talk about the elephant in the room: debt. How does inflation affect things like credit cards, car loans, mortgages?
That's a huge one, too. When inflation heats up, the Federal Reserve often tries to cool things down by raising interest rates. But that can really backfire if you've got a lot of debt.
Oh, yeah, I bet those 20% credit card interest rates feel even worse when inflation is high.
Absolutely, it's a double whammy. Those monthly payments can get a lot bigger as interest rates climb. Not to mention, if you're thinking about buying a house, those higher mortgage rates mean much bigger monthly payments, too.
So it's like you're getting squeezed from both sides, prices going up and the cost of borrowing going up too. Sounds like we need some serious strategies to fight back against this inflation monster.
We do, but the good news is that there are ways to protect ourselves. Some investments can actually act as a shield or even a weapon against inflation.
Okay, now you've got my attention. Tell me more about these inflation-fighting investments.
Well, historically, things like stocks, real estate, and even commodities like gold have tended to go up in value over time, often at a rate that beats inflation.
So instead of watching my money slowly lose value in a low-interest savings account, I should consider putting some of it into investments that have the potential to grow faster than inflation.
Precisely. And there are also specialized investments like Treasury inflation-protected securities or TPS.
TPS, what are those?
Think of them like bonds that change their return based on the rate of inflation, so they help your savings keep up with rising prices.
Interesting. So even though inflation can feel like this invisible force chipping away at our finances, it sounds like there are ways to fight back and even potentially come out ahead.
Absolutely. By understanding how inflation works and making some strategic choices with our money, we can minimize its negative effects and maybe even use it to our advantage.
This is great stuff. But I know our listeners are eager to hear those actionable strategies they can use to protect themselves from inflation. Let's get into those after the break. Okay, so let's get down to brass tacks here. What are some things we can actually do to combat inflation? It feels like we're always playing defense.
Well, it's all about taking control, right? And one of the best places to start is with your investments. Like we talked about earlier, just leaving a ton of cash in a savings account with those low interest rates could actually be costing you money in the long run.
Yeah, it's like watching your money just shrink right before your eyes.
It's a slow burn, but it can really add up over time. So make sure you're diversifying your investments, putting your money in things that have a good track record of outpacing inflation.
Like what kinds of things? Give me some examples.
Stocks are a good option. Real estate is another one. And maybe even consider dipping your toes into commodities, things like gold. The key is to not put all your eggs in one basket.
Right, so don't freak out if the stock market takes a little dip. It's a marathon, not a sprint.
Exactly, you've got it. Now let's switch gears a bit and talk about debt. Specifically, that high-interest debt like credit cards. It can be a real killer, especially when inflation is pushing interest rates up even higher.
Oh yeah, those credit card interest rates are scary enough as it is. Sometimes it feels like you're barely making a dent in the balance.
I hear you. So it's really important to pay down those high-interest balances as quickly as possible, even if it means making some sacrifices in other areas of your budget. And if you're really struggling, you might even consider refinancing to get a lower rate.
Refinancing, that's a good idea. I hadn't thought of that. So we've covered investing wisely and tackling debt. What else can we do to stay ahead of these rising prices?
Now let's talk about boosting your income. I know it's easier said than done, but in an inflationary environment, it's really important to try to keep your income growing along with those rising costs.
So it's not enough to just get a tiny cost of living raise from my employer.
Right. You need to be proactive, think about negotiating a raise, maybe explore some side hustles, or even think about taking some courses or getting some training to increase your earning potential.
I like that idea about investing in yourself, upskilling. That can pay off in the long run. Okay, so invest wisely, tackle the high-interest debt, and boost your income. Got it. What about the spending side of things? Any tips there?
Absolutely. We can't forget about being smart with our spending. Now, I'm not saying you have to become a total penny pincher and deprive yourself of everything, but it's always a good idea to take a close look at your budget and see if there are any areas where you can cut back without feeling like you're sacrificing too much.
Yeah, easier said than done sometimes. Where do you even start?
Well, a good place to start is with those recurring expenses that can sometimes slip through the cracks, like those subscription services you signed up for and never use, or maybe those online shopping sprees that have gotten a little out of control, or even something as simple as switching to a more affordable cell phone plan or internet provider.
Oh, and don't forget about the power of negotiation. I've read that a lot of those cable companies and internet providers, even insurance companies, are willing to give you a discount if you just ask.
You're telling me it never hurts to ask. The worst they can say is no. So yeah, there are definitely things you can do on the spending side to free up some extra cash.
Awesome. So we've covered a lot of ground here: investing wisely, tackling debt, boosting your income, and cutting back on unnecessary expenses. It feels like a solid plan for dealing with this whole inflation mess.
It is. And remember, the key is to take action. Don't just sit around and wait for things to get better. The sooner you start implementing these strategies, the better prepared you'll be to not just survive inflation, but actually thrive in spite of it.
Love that mindset. So it's not about feeling helpless in the face of inflation. We can do things to take control.
Absolutely. It's all about being informed, being proactive, and making smart choices with your money.
This has been incredibly helpful, but now I'm wondering about something else. Could there be a different system, a different way of doing things economically that's less vulnerable to these wild swings in inflation that we keep seeing?
That is a fascinating question, and it's one that economists have been debating for years.
I bet our listeners are dying to know your take on this. So let's dive into those alternative economic models after the break. All right, so we've talked about what inflation is, the impact it has on all of us, and some practical strategies to try and protect our finances. But now I really want to dig into those alternative economic models you mentioned. Are there systems out there that could be less susceptible to these crazy inflation swings we seem to keep running into?
Well, it's a question that's been bouncing around in the minds of economists and policymakers forever, really. Our current system, you see, it's mostly built on what we call fiat currency, which basically means its value isn't tied to a physical commodity, like gold, for instance.
So the value of our money is kind of just floating out there based on trust in the government and the overall economy. Seems a little shaky when you put it that way.
Yeah, it definitely leaves us open to some vulnerability, especially when you've got governments printing more money or, like we've seen recently, those big disruptions to global supply chains. All that stuff can fuel inflation.
Yeah, that makes sense. So what about those alternative models? Are there any that stand out as offering more stability? I've heard people talk about going back to the gold standard.
Ah, yes, the gold standard. It comes up a lot. It's where the value of our money would be directly linked to a fixed amount of gold. We used to do it that way, but it wasn't without its own issues.
I can see how pegging it to gold could feel more stable, but wouldn't it also be super limiting? Like, wouldn't we need to have a massive amount of gold in reserve to back up all the money out there?
You're right on the money there. It could definitely put the brakes on economic growth
Right.
because the amount of money in circulation would be restricted by how much gold we have in the vault.
And wouldn't we also be at the mercy of the price of gold itself? I mean, if the price of gold tanks, wouldn't our currency go down with it? Sounds like we'd be trading one problem for another.
You're exactly right. It's always a trade-off. Now, another model that's been gaining some traction is the whole world of decentralized digital currencies. Like Bitcoin.
Oh yeah, cryptocurrency. Everybody's talking about it, though I'll admit it's still a bit of a mystery to me.
It's the hot new kid on the block for sure, and there's a lot of buzz around it. People who really believe in these digital currencies argue they could offer a more stable and transparent system compared to our fiat currencies, mainly because they're not controlled by governments or central banks.
That's an interesting idea, taking the power away from the central authorities. But what about the wild price swings we see with Bitcoin? It seems like it's incredibly volatile, going up and down like a roller coaster.
That's a valid point. Crypto is still a relatively new technology, and we're very much in the early stages. Those price swings are definitely something to watch. But as the technology develops and gets more widely adopted, some folks believe it has the potential to be a real alternative to traditional money.
Definitely something to keep an eye on, but it sounds like there's still a lot of unknowns. Any other models out there worth exploring? Maybe some outside-the-box thinking?
Oh, there are tons of ideas floating around out there. Everything from resource-based economies to community currencies. But the real takeaway is that there isn't one perfect solution. Each model has its own pros and cons.
So it's less about finding that one system that's totally immune to inflation and more about weighing the different approaches, figuring out what might work best for a particular society and the challenges they're facing.
Exactly. But ultimately, no matter what system we're working with, the best defense against inflation is to stay informed, stay adaptable, and make smart financial decisions. It's about taking control of your own financial future.
This has been such an eye-opening deep dive. It's clear that inflation is a complicated beast with tentacles reaching into every corner of our lives. But it's also empowering to realize that we're not totally helpless.
Couldn't agree more. Knowledge is power, as they say. The more we understand about how inflation works and the effects it has, the better equipped we'll be to navigate these choppy economic waters.
Absolutely. Well, as we wrap up this episode, what's the one big takeaway you'd like our listeners to remember?
Don't let inflation paralyze you. Take action. Educate yourself. Make some adjustments to your spending habits. Explore different investment options. And remember, even when things feel uncertain, you have the power to make choices that protect your financial well-being.
That's such a great message to end on. Thanks so much for sharing your expertise with us today. It's been incredibly insightful.
My pleasure entirely. And to all our listeners out there, stay curious, stay engaged, and remember, your financial journey is a marathon, not a sprint.
That's a wrap for this episode of The Deep Dive. We hope you found this exploration of inflation informative and empowering. Catch you next time as we dive into another fascinating topic that's shaping our world.
If this podcast helped you, don't forget to like, comment, and subscribe. Your support helps us keep making these videos. Thanks for watching.